Yeah, and the risk of recession continues to rise. Eli, we're getting the new dot plots, new economic projections on the way as well out of the United States. What are we going to see ultimately on the terminal rate in your view? Because this is the rate hike that could change everything.
Absolutely. Now, we think that the terminal rate could go as high as 4.5%. And this really brings up the picture that the Fed needs to hold rates higher for longer in order to fight inflation, right? And this really caused the question the dovish pivot that is still in the Fed funds forward futures curve right now. And if this king gets moved away in terms of market expectations, we could see an overshoot in terms of a long dated US Treasury yields. And this is very key when you said that inflation risk is rising, Dan. Now, we've already been seeing several warnings, not least from the CEOs of major corporations telling us that the economy is slowing rapidly. And we are reaching an inflection point ahead, in my view, that if recession risk outweighs the benefits from fighting inflation, we could likely see a peak in terms of long dated US Treasury yields ahead.
Okay, so you want to be adding to exposure when it comes to long dated US Treasuries, even though there's pain in the bond markets right now. What do you think, Eli?
Well, it's always darkest before the dawn, and we do think that there is some serious value out there right now in the long dated USIG US Treasury yield space, and we think it is an opportune time to start adding exposure gradually.